Let me ask you something. Have you ever looked at your pay slip, seen how much tax was removed, and thought, wait, how is it that I pay tax every single month, but people worth billions somehow pay less than me percentage-wise? Because here's the thing. You don't have accountants. You don't have lawyers. You don't have holding companies in 3 different countries. So when you hear headlines like, "Billionaire pays little to no income tax," it feels impossible. It feels unfair, and it feels like there must be some kind of secret. Today, we're going to talk about that secret, calmly, factually, and without conspiracy theories. My name is Alex, and I spend way too much time thinking about how money works once you go past normal income levels. If you're someone who works hard, pays taxes automatically, and wonders how ultra-wealthy people play a completely different game, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because by the end of this video, you'll understand exactly why taxing billionaires is so difficult and how they legally minimize it. First big misunderstanding. Billionaires don't earn salaries. Here's what most people don't realize. Billionaires are not rich from income, they're rich from ownership. When you earn money from a job, that's income, and income is easy to tax. When you own assets, that's wealth, and wealth is much harder to tax. People like Elon Musk, Aliko Dangote, Femi Okedala, Tony Elumelu didn't become billionaires from monthly paychecks. They became wealthy by owning companies. And ownership is treated very differently by tax systems all over the world. Strategy number 1. They don't sell, they borrow. Let's start with the most important strategy. Billionaires don't sell assets to get money. They borrow against them. This strategy is publicly discussed and widely known. For example, Elon Musk has openly talked about using loans backed by his Tesla shares instead of selling them. Here's why this matters. Selling shares equals capital gains tax. Borrowing money equals no tax. Loans are not income, so a billionaire can own $10 billion in shares, borrow $100 million from a bank, spend it freely, and pay 0 income tax on it, and the asset continues to grow. This isn't illegal. This isn't hidden. This is how the financial system is designed. A simple math example. Let's compare you and a billionaire. You earn $40,000 a year. After tax, maybe you keep $30,000. A billionaire owns shares worth $5 billion. Instead of selling $50 million in shares, they borrow $50 million at 2 to 4% interest. If their assets grow at 8 to 10% annually, the loan is effectively paid for by growth. End result? You paid tax, they didn't. Not because of cheating, but because the tax system targets income, not unrealized wealth. Strategy number 2. Unrealized gains are not taxed. Here's another critical concept. If your assets go up in value, you don't pay tax until you sell. This applies globally. If Aliko Dangote's company increases in value on paper, there is no immediate tax. Why? Because that money is not realized. It exists only as valuation. Taxing unrealized gains would require governments to constantly revalue businesses, force asset sales, and risk destroying companies, so most countries avoid it. This is why billionaires can grow richer every year while reporting very little taxable income. Strategy number 3. Using holding companies. Most billionaires don't own assets directly. They use holding companies. This is common in Africa, Europe, Asia, everywhere. Instead of John owns company A, it's holding company owns company A. Why does this matter? Because profits can be reinvested instead of paid out. Taxes are deferred. Cash stays inside the corporate structure. Tony Elumelu, for example, is publicly known as an investor through structured investment vehicles. This doesn't mean tax evasion, it means tax timing control. And timing is everything. Strategy number 4. Paying themselves very little. Here's something that shocks people. Many billionaires pay themselves tiny salaries, sometimes $1 a year, sometimes nothing. Why? Because salaries are heavily taxed. Ownership returns are not until sold. So on paper, they look low income. In reality, they control massive economic value. Now, you might be thinking, okay, but shouldn't governments just close these loopholes? Here's the uncomfortable truth. These are not loopholes. They are core features of how capitalism works. If governments aggressively change these rules, investment slows, capital moves to other countries, businesses relocate. Money is global. Governments are local. The psychology behind why this feels unfair. Your frustration comes from something very human. You exchange time for money. They exchange ownership for leverage. Your brain sees effort. The system sees structure. This mismatch creates anger. But understanding the structure gives you power. This is where it gets really interesting. Here's what most people miss. You don't need to be a billionaire to apply the principles. At smaller levels, investing instead of only earning, reinvesting instead of consuming, separating income from wealth. The same rules apply, just scaled down. What you can do right now. Actionable steps. Number 1. Stop thinking only in salary terms. Income pays bills. Assets build freedom. Number 2. Start owning something. Shares, businesses, skills that scale. Number 3. Learn how tax timing works. Not avoiding tax, understanding when tax applies. Number 4. Think like an owner, not just a worker. Owners play long games. Workers play monthly games. Most people argue about billionaires emotionally. Very few actually study how they operate. The difference isn't morality, it's structure. Once you understand the structure, you stop being confused by headlines and start making smarter financial decisions. If this video helped you understand how the system actually works, subscribe for more honest financial education. Share this with someone who thinks billionaires are just lucky or cheating. And remember, you don't need to defend billionaires. You just need to understand the game, so one day you can play it better too. I'll see you in the next one.